Want help to grow your business? Download Bryn, the world's first business advisor in your pocket. To find out more, visit bryn.ai or search the App Store today.
Welcome back to Know Your Numbers. I'm Kevin Bees, and we today are going to talk through how to understand balance sheet to maximize your business net worth. For me, the balance sheet can be one of the most fundamentally important numbers to know in your business, and not everyone seems to understand them or why they're even called a balance sheet. In order to do that, I'd like to bring up my very good friend Dare to the stage to show us about balance. Welcome, Dare.
So for this trick, I want to show you a trick using cards and balance together. So could one of you guys shout out left hand or right hand?
Right hand.
Right hand. So if I just summoned all the strength to balance a pack of cards on my right hand, it happens like this, yeah? Before it drops, I want to hand over to Kevin to explain how it actually balances. So go ahead, Kevin.
Thank you, Dare. As I mentioned, balance sheets for me can be one of the most fundamentally important things in a business to understand from a numbers point of view. What is a balance sheet? A balance sheet for me is a snapshot of your net worth. It shows the value of your business and the value that you've created. It can be also, I like to think of it as a way to check the health of your business in one easy glance. Now we can see here in the picture of someone doing an awesome yoga pose, and we can associate yoga and balance and yoga and health and balance sheet nonetheless. Without further ado, I want to show you what a balance sheet looks like. Wow, isn't that sexy? It's the sexiest thing that I've ever seen. For some of you, you're thinking, what is it? It's a wall of numbers. Probably because you're looking at the weeds again, looking at this wall of numbers and thinking, what is this? We're going to talk about the bigger picture of this in a second so you can actually understand what does it mean and how do you use it. Unlike the profit and loss account that we spoke about in a previous episode, the balance sheet is actually a snapshot. Okay, it's almost like you're taking a Polaroid picture of the business or its worth or its health at this point in time, and that's what it looks like. Whereas if you recall, a profit and loss account was like a movie. It ran for a period of time. Now, the balance sheet itself is the big picture. What you're going to notice from this is there's a snapshot. It's for a set period of time. It's just this date. It is the big picture. It encapsulates everything else, all of the other numbers. So as an example, we spoke about profit and loss accounts in a previous episode. You can see here, the profit and loss account is included on here. It's almost as if I looked at this big picture of the balance sheet, which tells me about the worth or the health of my business, I can look at this profit and loss account and double click on this cell and I would see the detail of the profit and loss account underneath, okay? Why is it called a balance sheet though? Why do we call this thing a balance sheet? Why is that the case? To explain this, I want to ask you, how much is 50 Australian dollars worth to you? For most of you, it's worth 50 Australian dollars, right? So if I lend you $50, how much do you owe me? 50, I would hope. If I went and purchased books for $50, how much does my bank balance decrease by? Assuming I've purchased them and not sold them, you would assume $50. If I get $50 cash from the bank as a loan, assuming I have to pay no interest, how much do I owe the bank? $50. So there are always two sides to every transaction. The point I'm making here, there's always two sides to every transaction. The balance sheet balances because it captures both sides of every transaction. All right? And write that down, remember that. The balance sheet balances because it captures both sides of every transaction. That may not make sense to you now. Let me turn this into some numbers so you can understand. This is a very high-level big picture of what a balance sheet is. We looked at all of those detailed numbers before, but we can break it down into just three things, okay? Number one is, what do you own in your business? Now, ownership would be things like your bank balance. You own that. That's an asset that you can use. Maybe a car, maybe a vehicle, maybe some machinery. It's something that you own and you can use into the future to help generate revenue and income. Number two is what you owe. Okay, these are the liabilities. These are the things that you have to pay back to other people. So maybe your bank loans, okay, maybe something that you've borrowed. And then, of course, if we have what we own, our assets, and we deduct what we owe back to the banks or the loans that we've made, then we've got ownership. What do the investors own? What are the investors left over with at the end of the day? So these are the two sides of the equation, what you own and what you owe. and they balance off with, in terms of what's owned, in terms of the ownership, what are the owners expecting to have back. Let's make this clearer for you with some numbers. Let's just say, for example, you start your business today. This is a brand new business. There's nothing in your balance sheet. Nothing's happened yet. And you decide you're going to invest $50 in this business. Okay, so now the ownership of the business effectively owes you $50 back. You have an interest of $50 in the business. Now, you've put that $50 into the business in terms of cash. If you put it in terms of cash, is that something you own or something you owe? Something you own, right? There's $50 of cash in the business that you can go and spend in terms of growing the business and doing business activities. So we have on one side the $50 of cash. We currently owe nothing in this business, so that side totals to 50. And the other side, we know that the owners, their ownership, they're due back $50 as well. So 50 each side, it balances. We captured both sides of every transaction. Imagine then, as you do, once you have cash in the bank, you want to go and purchase some stock. You want to go and buy some products so you can then sell them. We take $50 out of the cash, we spend that, and we replace it with $5 of stock. Okay, so we now have, in total, still 50.
To continue enjoying this presentation, download Bryn, the world's first business advisor in your pocket. To find out more, visit bryn.ai or search the App Store today.